Good morning, everybody. Thursday, March the 9th. Tomorrow's Jobs Friday tomorrow. And, I've laid out pretty much what very, very, very much looks as if it's an identical scenario to the prior three: March, August, January. Jobs report tomorrow will be a bit of not only the ending of the full moon window closing, but also an indicator as to whether or not that view, which I'm giving the higher odds, does open up for that downside movement that we're looking for as we head into quad OPEX next week, end of the month, end of the quarter, and into April 6th. Not much to trade yesterday, like I said. Now we wait. A few of you guys posted in the chat room with the options, making money at the end of the day on those calls. During the day, it was a complete chop session. In the spreads room, couldn't get a safe edge, upside, downside, just couldn't get it. A lot of good ideas, a lot of good momentum, and even a little bit of payment. Sorry, not momentum, but there was some premium there, very small, but wanted to get a little bit of an edge, and we never got it. We had a 30-point range. But the risk trade, the 39.80, 39.75s we started the morning out with, got back up to around 100% credit on that middle of the day, 1 o'clock. Started going through that. And again, even though we got our little bit of a dip, right there at 330, you're just popped up to $3, back up to 250, ended the day full credit, and yep, started the day out already here 5:30 in the morning with the same post. Same exact spread looking for 39.80, 39.75s, $2.35 credit, almost 100% as of right now. And really, looking around, not even going to waste time here because dead flat yesterday. Dead flat, still looking for that 40-20, 40-30 bounce. Definitely getting it today. I will start my position for that big move to the downside that I'm projecting. I'll start the position. I'm not going to go in full blown. Got CPI coming next week on Tuesday, Taco Tuesday. Got the job tomorrow. Where I'm looking at that, though, is because we closed green yesterday. We closed up 5 points. Close green again today. I have no problem getting into splits, knowing that if you have high jobs like we had last month, 500,000 plus, or if the unemployment rate is down at 69, 89-year lows, 109-year lows, 259-year lows, whatever they're calculating it on, all of that is going to be fuel for higher interest rates faster and longer. So definitely the catalyst for the look to the downside. In this short term today, just looking for that move to 40-20, 40-30 over here on the SPX. Catalyst, got a gap over here on the VIX because we had a little bit of a move down overnight. Got a gap over here on the VIX to fill, which is always easy to fill. The gap fills on the VIX, the SPX moves up. QQQ, dead in the water, just trolling this 296. Same thing. A little bit of a catalyst for this to come back up here and pop 300 to get some, over bullish bulls, a little bit bag holding. Got a really, really nasty situation over here with Tesla. Number 4 weight on the SPX on the end, right back down to that 176 finally. This move down has just been a slow curl over since we got up into that 208. Just a slow curl over, just now coming on that trend line, which actually that trend line is not yet effective because we're not yet there. But again, here I am, I'm rambling on. It's a complete waste of time. The dollar, you got your pop with all that Powell talk, blah, 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 blah. And here it is going back to reality, back down, coming over to around 104, which is, again, good for the S&P, which should bring us for that 40-20, 40-30. So here we are. And, I'll drag this over here just to throw it on screen. Here's your Dow. Okay. The Dow is to the 50 retracement to the October lows, and the Dow is red for the year 2023. Here you are on the QQQ. QQQ dead flat, holding that 10-day moving average, as you can see, fractionally visiting oversold overnight. Same thing over here with the ES. Fractionally kind of visiting oversold overnight. Still holding that 39.7850, which Lowell is making a gang of money on. So looking for a bounce back up to that 4,325, which would give us our SPX 4020-ish kind of look. Russell 2000, green on the year, but again, Russell 2000 below the 50-day moving average, as is the S&P 500. So had its move, did a lot of work earlier. Now it's starting to just kind of relax and settle itself. But again, nothing fantastic to go out there and say today, of all days, is a day that you want to go and deploy an enormous amount of cash. Today only, I love, is the same risk trade that we had yesterday. Right there. Sell the 39.80 puts, buy the 39.75 puts, make 100% on your money at 250. Other than that, we get that pop up there into this 40-15, 40-20, 40-25, 40-30 area. I am going to be looking, and I'll show you here, SPY. Don't even need to go that far. I'll be looking at these 392, 390, most likely the 390s. I have them on my screen. I've been watching them. I'm looking at the April 6th 390 puts. Pull them up for you right here. 230406 put 390. This is how they've been trading over the past few days. Now, yeah, on Monday they did drop quite nice. Looking here out a little bit further, because they were down here at 293. I'm kind of looking for this to get down below that $5 level, somewhere around here into the 350 range. And I'd be kind of comfortable to say, yeah, okay, sure, I'll get it. I'm not getting the bottom, I'm not getting the lowest price, but at least I can get a pretty decent price and have virtually an entire month for everything to work out. Because again, what I'm be looking for, as we showed there, that move to the downside on SPY, taking out that low from last week, and then progressing lower to a much lower area, and those would actually be a very beneficial trade to be involved with. So that's what I'm looking at. Have a fantastic Thursday. Got a serious sinus infection. I'll see you guys in the chat room.